Okay folks, welcome back to the channel. Here we have the gold 4-hour chart in front of us, and we're going to be going over a ICT AMD sell model based off the current price action. So what we have over here is we have 4-hour structure. So if we understand, we have minor structure to the left over here. So if we understand, we're following our minor structure as of now. So we have a structural high, low, high, and now from here we've had a break or an internal break over here. So what this is commonly referred to as is a change of character, right? This is our 4-hour change of character over here. So this 4-hour chalk I'll label in white. This is a chalk over here. So what makes this a change of character? Well, it's simple, right? We're simply following our structure down from here. So this is the last internal low, which then created this all-time high over here on gold. This is at 24.34 roughly, and now we've had a change of character down here. So from here we understand now that the 4-hour has changed character, we're simply trying to key off a fair value gap before heading lower, right? We're trying to ride this bearish momentum. So what we have over here is we have a fair value gap over here. So if I zoom into price action, this is our 4-hour fair value gap. So I've marked it out in particular, right? The things that we want to pay attention to is, number one, we do have a fair value gap just over here. So this is a fair value gap I'm going to label in blue. So this is our FVG, or our fair value gap. And as you can see, notice how we have the wicks of these candles. This one wick over here fills the inefficiency from here, right? So this is a fair value gap fill. So the market moves higher to fill inefficiencies, right? Fill inefficiencies. And this is something that we need to bear in mind in every single market we participate in. So now that we've had a fill of structure here on gold, what we've had here is a subsequent break of structure to the downside, or break of internal structure. So now if we go down to the 15-minute chart, right? The 15-minute chart paints a very similar picture, where what we've seen is we've seen a 4-hour change of character. We've had a minor retracement before the overall bearish order flow, right? So now we're going to be going over a specific AMD case study that you could have taken, right? So here we are on the 15-minute time frame. Again, the 15-minute time frame, we can see how we haven't had a strong close, right? So we understand the fair value gap was over here, and the majority of this fair value gap has been filled via these candles over here. So these candles filled on the 26th of April, so about a week ago from time of recording the video. So from here we're going to be dissecting a clear AMD model at the 4-hour fair value gap, right? So from here we're going to now go down to the 5-minute time frame, and the 5-minute time frame we begin to dissect our overall price action. So what we have over here is a very simple bearish case study on gold. Starting from here, what we call the Asian range. So the Asian range has two main subsections we want to be considering, right? The Asian range itself builds liquidity, right? So we call this the accumulation phase of the market. This here is the accumulation. And so what is the purpose of the accumulation, right? So the accumulation, or simply put, the Asian range, aims to build liquidity. So we have two types of liquidity in the market, right? We have the Asian high and the Asian low. So the Asian high over here marked out in the first white line, if I label that ARH, so Asian range high, the Asian range high is essentially buy-side liquidity, right? This is what we use as buy-side liquidity, the Asian range high just over here. Now the second data point is what we call the Asian range low, and we use these as essentially data points and reference points as to areas of liquidity the market will look to target. So this is the Asian range low. So the Asian range low represents sell side liquidity, right? So now that we understand that the Asian range again, so quickly, one question I often get with my students is, what is the timings of the Asian range, right? So the Asian range timings specifically are, the Asian range timings specifically are 1 a.m. to 5 a.m. UK time. So 1 a.m. to 5 a.m. UK time, or we got 7 p.m. to midnight Eastern Standard Time, right? 7 p.m. to midnight Eastern Standard Time. So these are the timings that you should be operating in when it comes to identifying the Asian range and therefore the subsequent liquidity, right? Very important to understand these ranges. Please calibrate to this wherever you are around the world. So now after that, we have to simply follow our structure up to the fair value gap over here. So this is how you could have potentially done that. So we have 5-minute bullish structure post the Asian range. So we have structural high up here, So if I quickly label this in yellow so people can distinguish from the 4-hour structure. This is the 5-minute time frame, everyone, right? So this is how we analyze 5-minute structure. So we have a structural high, structural low, structural high, and a structural low, right? So understanding a few rules when it comes to our structure is that we must have a minimum of 2 candles as a pullback. When we're on the lower time frames, having a minimum of 2 candles as a pullback is essential for having correct market bias and overall correct structural read. Again, what we have over here is we have a structural high over here, we have a structural low, and we have a structural high just over here. So this structural high over here was produced at 10 o'clock in the morning, 10:10 UK time, which corresponds to that London session, which is what we understand from ICT concepts anyway, right? So we understand that the high of the day or the low of the day, in this case, it's the high of the day. We understand that the high of the day typically occurs in that London session. Yes, it can happen in the New York session as well, but London session is often your best bet when it comes to understanding where the potential high or low of the day is going to form. So this now gives us the high of the day, and notice how we've also come into that 4-hour POI, right? That 4-hour fair value gap marked out by that red line. So this here represents our Judas swing. Okay, this here is our Judas swing. Now the Judas swing I'm going to label in yellow, as I often do in every video, because the Judas swing is quite simply a sweep of liquidity, right? It's swept buy side liquidity, right? We understand we've entered a pool of inefficiency. This is 4-hour inefficiency marked out by the red line, and we've also swept that Asian high over here in line with sessions. So again, now that we've understood where the Judas swing is, you want to ask yourself, well, what validates a Judas swing in the first place, right? What do we look for in a Judas swing, right? There's 2 things we look for in a Judas swing. The first thing we look for is we look for a shift of market structure, or an MSS, right? Market structure shift. This is the first thing we look for. The second thing we look for is we look for a clear fair value gap to form, right? And this is something that we're going to be going through in a lot of detail. So we look for a shift of market structure, and if I type that in, we look for a fair value gap in the market itself. Okay, so now that we've had a shift of market structure, right, we understand that we've seen price go from bullish to bearish, right? So this is our basic market structure shift, right? So we see a shift of market structure over here, right? BOS, right? BOS or MSS, they really mean the same thing. Now that we've had a break of structure to the upside, from here, this is what validates our Judas swing, right? So we're in a session and we've had a break of structure, and notice how prices left a fair value gap over here. So potentially this could have been your first entry over here. So we have a fair value gap here where the Judas swing is, and your job is to simply key off the fair value gap. So this here is one particular trade idea you could have taken. It's not the preferred trading idea I would have taken, because I personally want to see price react in the New York session. I want to see a New York session fair value gap form. So now that we understand that we've had a break of structure to the downside, what we do is we carry on the same exact pattern, right? So we look for a structural low, a structural high, a structural low, and a structural high. So we understand, again, we are confirmed bearish. So we've had a shift of bearish structure over here, and since then we've had 2 confirmed bearish switches, right? So we've had a boss over here, and we've had a break of structure over here. So we understand structure has aligned with our overall narrative of looking for sells after we've tapped into a 4-hour POI, or we've mitigated a 4-hour fair value gap. And so from here, we need to understand a couple of things when it comes to our entry. Now, what we have over here, notice how in fact, all of the inefficiencies in this region have been filled, right? So our job is to simply key off a fair value gap that's priced correctly. Now, what do I mean by that? So we have a fair value gap over here that's been produced in the New York session. If I quickly label this on the chart so people can see, we had a fair value gap just over here in this region, right? So it's a bit small to see, but nevertheless, it is a fair value gap in price. This is an inefficiency, right? So what time did this inefficiency actually occur, right? So we need to understand that every fair value gap has to form in a specific time region. So this is a fair value gap that's actually produced itself at 15:30 UK time, which corresponds to 10:30 Eastern Standard Time. So we understand this is the New York AM session, right? So we understand this is XAU USD. So this is still technically a dollar pair, right? So we understand that the New York AM session is going to be a high probability trading zone for this particular market, right? So we understand that once we've identified a structure, right, we understand we're bearish in terms of our structure, hence why we have this arrow over here. This is a structural break over here, break of structure, fair value gap. Now, the last thing we want to look for as traders is that we want to make sure that we're selling in a premium range. So what we have over here is we have a structural high up here, which I've marked out, and we have a structural low down here. So this structural high and this structural low represents a dealing range, right? So what do we mean by a dealing range? A dealing range simply means we have a swing high over here and we have a swing low down here. So once we've identified our dealing range, the next thing we want to identify is we want to simply identify an area of premium versus discount. Now, how do we do that? Well, we use the Fibonacci tool and we project the Fibonacci tool from the swing high down to the swing low like this, right? So we understand that this is the 50% level over here, and anything above the 50% level, so this region over here, is simply a premium. So we are looking to key off a fair value gap in the premium, right? So we understand this gives rise to an order block. So what do we mean by an order block? Well, an order block is essentially a region, right? An order block is a region where we want to buy and sell off, right? So we understand we have a fair value gap just over here, and we also have a fair value gap just over here. So if we zoom into current price action, right? Price action at the time, this here is our fair value gap over here. Notice how we have a gap in the candles over here. So this here is a time-based fair value gap. So what time did this fair value gap occur? Well, it occurred at 15:25 UK time. 15:25 UK time, which is 10:25 AM Eastern Standard Time. So we understand that we're in the New York session, right? This is part of the New York kill zone, or the New York ICT silver bullet, whatever you want to call it, but we understand that we're trading session volatility. So when we see a break of structure to the downside and a fair value gap within our price, this gives us an extremely high probability trade setup in terms of the basic rules of an order block. So to quickly go over the rules of an order block one more time, we understand that we've had a break of structure. We've left a fair value gap here in the markets, and we are above this 50% level over here. So this Fibonacci tool represents that 50% level. So that being said, what is the actual candle, right? What is the order block candle itself? Well, the rule I give to a lot of my students, and just a general rule of thumb, is once you've identified the fair value gap, which happens to be this region over here, the order block is the candle before the fair value gap, or the candle before the inefficiency in the premium. So this candle over here would represent the order block, okay? So the order block I'm going to label in gray, like I do in a lot of my videos. This here is the order block. So this is a 5-minute bearish order block, 5-minute bearish OB, okay? So with that being said, your job from here is to simply key off that fair value gap, right? Key off the order block, right? Understanding that price will mitigate it at some point. Yep, some point out of session or in session, it doesn't really matter. And once you've identified your order block, right, where do you target? This is the next question a lot of students asking. Where's the take profit? Where's the TP? Well, remember at the start of the video, or towards the start, we understood we have an Asian range high and an Asian range low. Well, this Asian range here is essentially sell-side liquidity. So we understand that the markets move from inefficiencies and liquidity pools to the next liquidity pool and the next inefficiency. So this is an Asian range low, and this is a classic AMD sell entry where we're typically looking to target the Asian range low as an absolute minimum, right? As an absolute minimum, as a scalp trade, which is something I highly recommend on gold due to its volatility and overall upwards trajectory. It's better just to scalp gold, especially when you're going counter trend. This is a counter trend trade, no doubt, because again, we're bearish, right? We're looking to sell. From here, keying off the fair value gap, right? Having your stop loss essentially just above the order block, around even having it at the structural high is okay, right? And as you can see, the first target will be the Asian range low for a 1 to 3 hour trade, right? This is a fantastic potential AMD that you could have taken here on gold simply based off the simple rule set, should I say, of accumulation, manipulation, and you're simply catching a distribution, right? So to quickly summarize that, the accumulation is essentially a low volume time of day. So it's essentially the range before the Asian range. Some people call it the central bank dealers range and the Asian range. This here marks out the accumulation, right? All of this here marks out the accumulation. This is low volume time of day. Now, I recommend to beginners sticking to the Asian range as an area of accumulation, right? And you're simply looking to sweep the Asian range high, target the Asian range low. This is one of the main setups that we have. So we have the accumulation in the form of the Asian range. The manipulation is essentially the Judas swing or the turtle soup, it's whatever you want to call it, right? But the ICT Judas swing is what I call it, and it typically represents all the time and a manipulation. And from here, to validate a potential distribution and to get involved in a potential distribution, you're essentially identifying an order block to trade off, right? Very simply, and you're targeting a liquidity pool such as the Asian range low. So this is essentially how you want to trade, right? A quick summary of what makes an order block. Well, there's three main rules, right? You want to see a shift of market structure. You want to see a fair value gap in price, and you want to see price in a premium because you're looking to sell. If you're looking to buy, you'd want to be in a discount. But these are the three rules that help validate the overall order block and therefore the overall AMD trade. And as you can see, yes, I think we came close. Yeah, we did get stopped out in the end. Again, this is why it's important to scalp, because gold is a tricky pair to trade, in my opinion, at least. So a simple scalp trade could be taken simply targeting the Asian range low in that New York session. So we had a New York trade over here targeting the Asian range low. And this is a great way to scalp gold if you're unsure of the overall bias and direction. Simply target the next liquidity pool and key off a fair value gap. It's as simple as that.